Hello and welcome to Business Incorporated Live on Channel Television. We'll be tracking the markets, the economy, and see how all that affects your pocket. Here are the stories making the headlines. U.S. House Committee approves 3-year AGOA extension for Africa. Ghana receives 370 tons of certified rice seed to boost domestic rice production. And Libya and Serbia signed MOU to strengthen trade and economic ties. Great to have you join us for this half hour. I'm Will Ibang, and let's see the commodities markets now and see what's happening in the oil space. Oil prices eased on Thursday as investors shifted focus back to Russia-Ukraine peace talks and monitored potential fallout from the U.S. seizure of a sanctioned oil tanker off the coast of Venezuela. We see Brent crude down more than 1.53%, that's $61.26 a barrel. WTI, $57.57 a barrel. And now this is happening because we're seeing so much happening in the Middle East, and Ukraine has not yet reached a peace deal with Russia. So let's see how other metals are doing now in the commodity space. You see spot gold down 0.2%. Let's look at the metals market very quickly, down 2%, 0.2% to $4,221 per ounce. And U.S. gold futures also on that screen, also opposite direction there, up 0.6% at $4,249 per ounce. Spot silver also up, platinum up, palladium in negative territory. Well, let's see what's happening in other commodities market. We're coming back to Africa. Tomatoes, we're going to be talking about that. And we see that tomato is a staple cuisine in Africa, and a lot of cooking cannot be done without it, especially now we're in the festive season, and we're seeing a dip in the price of a 50-kilogram bag of tomatoes in Nigeria. And we're going to be joined by FDC analyst Emefiele Onyelukachukwu, who's going to be talking about what's happening there. Good afternoon, Emefiele. It's good to have you join us.
Thank you, Will, for having me.
Yes, tomatoes, we can't do without them. I mentioned that earlier. But what's really driving this drop in the prices of tomatoes now? Especially this is a season where we always see a spike in prices.
Yes. Tomato currently, yes, thank you. Tomato, currently we're seeing that tomato prices have dropped by 33%, especially this period that is supposed to be a festive season, that price is supposed to go up. However, we're seeing that prices are going down. And one of the major reasons why we're seeing this is because currently this is the harvest season in major producing states. For example, like Kano and Katsina, we're seeing that there's ample supply from this region. That's why we're seeing that prices are coming down. And another reason why we're seeing prices go down is because of consumer resistance. Because we're seeing that disposable income do not match the cost of living crisis. And as a result of that, we're seeing that purchasing power has reduced. And this can even be seen in the inflation figures for the past 2 months. That's the month-on-month food inflation, which was negative deflation. And as a result of this, we're seeing that consumer demand has dropped. And tomatoes is very perishable because it can spoil easily. Then we're seeing suppliers beginning to reduce prices so that individuals can buy and these tomatoes cannot spoil. So due to consumer resistance and ample supply because of harvest season, we're seeing that prices of tomatoes have dropped this period.
Looking at the price decline, and this is December, we're seeing this drop. Well, is this going to be sustained into next year, 2026? Because it is one of the most important ingredients in sub-Saharan Africa. And looking also at the value chain, we can't just have tomatoes without having derivatives such as maybe tomato paste and everything. Where are we at now in terms of our value chain, and how can we actually strengthen this in the country? Is there any steps being made by the government?
Regarding if this price is sustainable, in fact, we're seeing that most farms have not even reached their harvest season, the peak of their harvest season. And so in the coming weeks, we're expecting to see more supply from this farm. Definitely prices will go down. It will trend downwards. Also, concerning the value chain, Nigeria is one of the largest producers of tomatoes in Africa and produce about 2.4 million metric tons. However, we still see that we're the largest importer because of one of the major factors, post-harvest losses. Post-harvest losses contribute. We have about 40 to 50% of farm produce that do not get to the tomato, get to the final consumers. And one of the major reasons is due to lack of adequate storage facilities. We do not have cold storage facilities that help to keep these tomatoes in the right temperature so that they do not spoil. And another reason why we're seeing that our value chain is not, we're seeing that tomatoes production is not high is because of the use of crude implements and tools for production. Most of our farmers are small scale farmers and they use crude implements, they use old methods, techniques to produce these tomatoes. That's from the handling of the tomatoes to the sorting of the tomatoes, everything they use the old method. And as a result of this, we're seeing that production is not as high as it's supposed to be. And another factor that's contributing to this is inadequate infrastructure, poor infrastructure, such as bad roads, where the roads that were supposed to use to distribute this farm produce to the consumers, they are not so good. So we also find out that tomatoes spoil. So in order to strengthen our value chain, one thing that we can do is to invest in, the government can give out incentives to subsidize the cost and invest in cold storage facilities in order to keep these tomatoes in the right temperature. Another thing we can do is the government can also carry out training for our farmers, because most countries, that's the global producers, such as that's Asian region, they carry out training for their farmers to teach them modern techniques in order to improve production of tomatoes in their country. So that's one thing Nigeria can do. Another thing the government can do is also to give government incentives to subsidize the cost of um, fertilizers and as well as equipment that are going to be used for farming. So once all this is done, I'm sure that the value chain for Nigeria will be strengthened.
So you're saying that infrastructure is one of the key areas that is dampening or the
Production.
progress of the value chain in terms of production of tomatoes, in terms of not just the raw tomatoes, but say tomato paste and possibly other derivatives that can be made from it. But looking at a report here from the Food and Agriculture Organization, FAO, it says Nigeria has the largest cultivated area for fresh tomatoes and an estimated yield of about 3.91 tons per hectare. But what they just seen is that only about 45% of the tomatoes harvested are lost before they get to the final consumer. Can you tell us why we're seeing a continued trend of this issue and what can be done to mitigate the high level of waste we encounter?
Tomatoes is very perishable and it is made up, 70% of tomatoes is made up of water. And because of this, it spoils easily. That's why we're having post-harvest losses. And one of the things that is supposed to help to reduce this is adequate storage facilities, which is cold storage facilities, which we do not really have here in Nigeria. That is why we're seeing that tomatoes is, that's why we're seeing post-harvest losses here in the country. And another thing is like I said before, infrastructure, poor infrastructure from when you move the tomatoes from when it's produced to the final consumers. Because of the bad roads, you find out that most of them get spoiled, and instead of it to take a shorter distance to get to this, maybe a drive that's supposed to take 30 minutes will take about 15 minutes because of the roads are not good. And because of we don't use cooling trucks to take this farm produce to the consumer, because of it, and then the temperature is high, we see that the tomatoes, some of them end up spoiling before getting to the final consumer. That's why we record 45% post-harvest losses. And one thing that can be done to mitigate post-harvest losses is invest in cold storage facilities. The government should invest so that the farmers can be able to store this farm produce before getting to the final consumers. Then another thing is also to train them on how to use all these facilities, so that train them on how to use these facilities in order to in order to train them on how to use these facilities so that they can so that these tomatoes cannot so that these tomatoes do not spoil, yes, before getting to the consumers. And then the bad roads as well. The government should also fix the bad roads in order to reduce post-harvest losses in the country.
Okay, so infrastructure and training are necessary for farmers and especially in the
Yeah.
country to boost tomato production. Thank you so much. Emefiene Onyelukachukwu, analyst with Financial Derivatives Company. Thank you so much.
Thank you for having me.
So let's head to the southern part of Africa now, where Botswana has reimposed an import ban on some vegetables like tomato and potatoes from South Africa. And this move by Botswana is said to be a way for its citizens to buy local. Now, in 2024, Botswana President Duma Boko lifted the imposed ban, which was implemented in 2021 by the previous administration. Now, the two neighboring countries form part of Southern Africa's Customs Union, that's SACU, which was formed to promote free trade. Now, a U.S. House committee has approved a bill to extend the African Growth and Opportunity Act, AGOA, for another 3 years, maintaining duty-free access to the U.S. market for eligible African countries. Now, the bill passed the Ways and Means Committee 37-3 and is now headed to the full House of Representatives. Though no date has been set for a vote, U.S. officials had previously hinted at possibly excluding South Africa, but the committee did not address this. South Africa's trade ministry says it is working to stay in AGOA despite tensions over tariffs and trade policies under the Trump administration. The country continues to monitor developments closely. Well, let's move on to Ghana now, Western Africa, where the country has received 370 tons of certified rice seed under the Korea Partnership for Innovation of Agriculture, that's the K-Rice Belt project, to boost local rice production and reduce imports. The seeds, developed by CSIR's Crops Research Institute with Korean technical support, include high-yield varieties such as Agra rice and Legon rice 1. Farmers will receive these seeds free of charge as part of the 5-year project running until 2027. Now, officials say the initiative will strengthen Ghana's rice value chain, enhance food security, and help the country move forward greater self-sufficiency currently at around 51% in the country. So let's see what's happening in Africa as well. We see Libya and Serbia have signed a memorandum of understanding aimed at boosting economic and trade cooperation between the two countries. The agreement was signed in Belgrade by Libya's Chamber President Mohamed Araid and Serbia's Milo Vesovic, with the senior officials and business representatives in attendance. Now, the MOU will establish a joint chamber to coordinate projects, expand trade, and promote investment between Libya and Serbia. Now, let's head now straight to the markets and equities market and see how top stocks are performing. See, the NGX in green territory at intraday, up over 9%, almost 0.6% at 147,735 points. And this is due to buy interest we're seeing in MTN Nigeria and NEM Insurance. The insurance stocks are also performing really well. We see Mansard also on that list, and a lot of the Legend Internet not doing badly too at intraday. Now let's look at South Africa, also jumping high, 0.76% at 111,889 points there. A lot of action for stocks in Africa. Let's look at EGX, that's in Egypt. Oh, well, not so well, doing so well at intraday, marginally down though, 0.01% at 42,047 points. And we see Kenya closing Wednesday's session down 0.02%. Let's check in with the Middle East now and see how they performed at intraday. We see Dubai up 0.39% at 6,100 points. And we see Abu Dhabi up 0.25% at 10,000 points. And we see Saudi trading in negative territory. That's bucking the trend, positive trend we're seeing there, 0.18% at 10,706 points. And the Qatar index also is up 0.89% at 10,903 points. Let's check in with the U.S. markets now, see how they perform, especially after the third rate cut that was expected, well, in line with expectations yesterday. We see that Oracle's results reignited fears about high-flying tech stocks, even after the Federal Reserve gave that rate cut to boost equities markets in the prior session. Now, the S&P 500 futures slid 0.55%. We see the Nasdaq futures down 0.77% and the Dow Jones down 0.17%. Oracle shares tumbled almost 11% yesterday after the cloud computing company posted disappointing quarterly revenue and raised its spending forecast. Now, this report we're seeing here, I'm looking at it right now, added more fuel to the debate about how quickly tech companies will be able to see returns on their AI investments. A lot of things are happening around the AI space, so we're going to be keeping an eye on that developing story. Now, Asia markets, let's look at how they performed at the close of business today. We see Asia Pacific markets gave up earlier gains to trade, mostly lower today, following the U.S. Fed Reserve's third rate cut of the year. Now, Japan's Nikkei 225, we see that down nearly 1%, 0.9% to close at 50,148 points. Kospi in South Korea down 0.59%, mostly red in Asia. Hang Seng in China 0.04%, and we see China, mainland China, that's the Shanghai Composite, we see that index also in negative territory, down 0.7%. But the Nifty 50 in India bucked that trend to close in positive territories, up 0.55%. We're going to be checking out how Europe markets are reacting to Trump, the Fed rate cut for the year, and we're hoping to see possibly a positive trend there. We're joined right now by Chiponda Chimbelu, is right there in Berlin. Chip, how's it looking in Berlin markets?
Well, Will, European shares are making modest gains today, and the stock 600 is actually up 0.2%, and Germany's DAX is around the same level higher. Now, investors are once again concerned about tech valuations, and that is what is offsetting relief from the U.S. Fed Reserve's rate cut and less hawkish commentary yesterday. And of course, it is the renewed worries over tech valuations after Oracle's weak forecast, Will, and that has, of course, raised fears that major investments into AI will take longer to yield returns than has been predicted, like you said. And we are seeing that concern on markets in Germany as well, with the shares of German software giant SAP dropping more than 2% in today's session. And of course, investors are also looking at what is unfolding in Latin America. Now, on Wednesday, the U.S. seized an oil tanker off the coast of Venezuela, and U.S. President Trump alluded to other things happening there as well. So that is a space that will be watched very closely.
Interesting, Chip. But walk us through another story that is developing here in Europe. We're seeing the EU reaching a landmark deal on climate targets, and they agreed to slash greenhouse gas emissions by 90% by 2040. Walk us through the details of that, Chip.
Well, Will, on Wednesday, the EU agreed to reduce greenhouse gas emissions by 90% compared to 1990 levels. And that is part of a goal to help the bloc reach net zero by 2050. And the target requires European industry to reduce their emissions by 85%. And the rest of the reduction would be accounted for via international carbon credits. And that means payments to developing countries via carbon credits to cut emissions here in Europe. Now, this is one of the world's most ambitious emissions cutting pledges, but it is still weaker than what Brussels had been originally planning. And it also shows that there is division within the European Union about the speed and the cost of its climate protection goals. There are two major climate protection targets that the EU has: to cut emissions levels by 55% by 2030 when compared to 1990 levels, and to have net zero emissions by 2050. But there's also growing resistance against those climate protection goals in the bloc.
Interesting there, but we see that there's some pushback coming in for this because a lot of people possibly don't want fossil fuels to go away very quickly. Why is that?
Well, Germany, for instance, here the current government has been concerned about the cost of such targets, with a fear that they can significantly increase the cost for Germany's energy intensive industry on which, of course, Europe's biggest economy depends. And those concerns are also shared by countries like Poland, Slovakia, and Hungary. And of course, we also do have another camp of countries here in Europe, and those are countries like Sweden, the Netherlands, and Spain. And they are more concerned about what extreme weather events could do when it comes to climate change. Now, rising sea levels, of course, would hurt the Netherlands, which is a low-lying country. And Spain has also had droughts that have led to severe water shortages, which have been hurting its agriculture. But it's not just about those fears for those countries. It's also the fact that they believe that more ambitious climate targets would help encourage green innovation in the EU. But the pushback is also because of the current political landscape and the European economy, which has been sluggish in recent years. It is, of course, harder to justify the costs linked to climate protection measures when there are other priorities like spending on defense or even on social welfare.
Thank you so much, Chiponda Chimbelu, for sharing that with us. We hope to see more climate targets being met, especially with global warming taking center stage right now. It's really hot here in Africa. I don't know about in Berlin. Thank you so much.
Well, send us some of that heat, Will. It is getting cold.
Thank you so much, Chiponda Chimbelu. He is a Deutsche Welle correspondent right there in Berlin. Thank you so much. So now we'll move on to crypto space now. Let's see what's happening there. We have got some headlines, but not a lot of headlines to talk about. We see the UAE telecom giant E&S has signed an MOU with Al Maria Community Bank to test AE Coin, a dirham-pegged stablecoin for consumer payments. And this initiative explores integrating the regulated token into EN's digital channels for bill payments and recharges, marking a key step in UAE's digital finance evolution. Now, the dirham-pegged stablecoins like AE Coin are designed to maintain a stable value tied to the UAE dirham, and that's facilitating secure and efficient digital transactions. What's up next? Let's look at other news there. The State Securities Commission, the SSC, on December the 10th, that's yesterday, announced the establishment of a management board for the crypto asset trading markets. Now, this followed a decision issued by the Ministry of Finance. According to the SSC, rapid global digital transformation has accelerated the development of crypto assets, which are gradually becoming an integral component of the digital economy. Now, in the context of strengthening regulatory capacity, it's essential to investors, to protect investors and preserve national financial security. And the formation of the new management board is therefore considered a timely and necessary step aligned with current regulatory needs and international trends. Let's see what's next there in the crypto world. SEI, that's SEI, the high-speed blockchain network, has announced a major distribution partnership with smartphone manufacturer Xiaomi, which will see next-generation crypto wallet and discovery app pre-installed on all new Xiaomi devices sold outside mainland China and the United States. And the move marks one of the broadest consumer-level deployments of all crypto infrastructure by a global electronics brand. That's huge. We're waiting to see what Xiaomi has for us. And that's a wrap on the show. I'm Will Ibong. I'll see you next week.